Alright, what's going on, you guys? It's time for probably arguably this is going to be one of my favorite videos to ever do because one, I love just going over my strategy, but I feel like how do I want to start this? And I'm gonna leave the video like this too. Right, for me, this strategy in particular has always been a part of my life. So my trading journey from 2018 all the way up until now, this has been a strategy that I've always knew about, but it wasn't really until these past couple of years, I would say probably like 2020, 2022-ish, where I finally started like, really tapping into this strategy in particular. I don't know why my voice over here, I got a burp, but it's like it wasn't until I'll say 2020, 2022, and then even just like more confirmation outside of things like between personal accounts when I had my biggest year in trading in general. So even now with the funded accounts, it's like this strategy in particular, every trader has their moment where they find their trader's edge. When you look at your favorite traders, when you look at your favorite people on Instagram, favorite people on YouTube to follow, the top dudes in the industry, the top girls in the industry, right? Every person has found their edge. But I would say one of the biggest things that we all have in common is really just the ability to be disciplined, the ability to be patient every single day, to the ability to be disciplined every single day. And I can't speak for them, but for me, what led me to like really just being so focused and really being disciplined on my one strategy was I got tired of losing. I got tired of making those stupid mistakes. I got tired of doing dumb stuff that I knew I shouldn't have been doing on the charts that was hindering my success. Like there used to be times where I used to hold trades longer than I needed to. I would turn a winning trade into a losing trade. I would have a winning trade and then I would enter another trade and now I lost all my profits and now I'm back at break even again on the day. Like just constantly making like little petty tedious mistakes over and over and over again. And it's like as a trader, maybe you're in this phase right now in your life. For my beginner or advanced people, like for me it was like it gets to a point where you just get tired of your BS. I ain't gonna cuss, but you feel me? Like you get tired of your BS, you get tired of your own crap. You get tired of making the same mistakes over and over and over again. And it's like once you get to that breaking point, like when you really like really look in the mirror and really look at yourself like, bro, I am literally tired of making the same mistakes over and over and over again when I have the ability to be one of the best. And not it ain't even gotta be about the best amongst the people, but I have the ability to change my financial situation. If social media was gone tomorrow, if I wasn't looking at anybody else on social media, if I would just focus and tunnel vision to myself, not worrying about posting, not worrying about X, Y, and Z, not worrying about what the next person is doing. Not necessarily talking about me, but I'm talking about anybody in general. Not worrying about what somebody else got going on or posting or trying to provide a service. If I was solely focusing on myself and locked in with trading, how much faster would I grow? How much more disciplined would I be? I'm tired of my own BS. You feel me? So it's like once you get to that moment when you just finally realize the petty stuff that you're doing and how close you are to being profitable, you're gonna lock in. So sorry for that long intro, but without further ado, let's jump right into it, man. Let's get into my main strategy that I have been using to kill the markets on US 30 and NAS 100. All right, so for me, this video, the last video for scalper video, we talked about NAS. This video in particular, I'm gonna cater it to the US 30, aka the mini Dow Jones. Now, the reason why is because for me, US 30 has been my bread and butter for the longest. Two, it's a lot of people that always, it's probably if you look on social media right now, or if you look on YouTube, or just people that trade top stuff in general, everybody trades in Q. So I'm gonna diversify your portfolio right quick and put y'all hip to trading the Dow Jones and seeing what I see on the charts. Now, in the last video, I talked about the fibs. This video, this is still gonna be the same thing, but on a bigger time scale, right? So my main strategy, what I do every single morning, what I do every single week when I start the charts, let me just go ahead and rewind it back actually. I'll actually walk y'all through my entire thought process. Boom. So this was last week on the charts. So when I'm looking at the charts, what I'm looking for is I'm paying attention to where are my key levels at. So I'm on my 1 hour, I'm on my 4 hour, and I'm using this to determine my range of what I'm looking for the week. So if I'm coming into this new week of the charts, I'm like, okay, cool. Mentally, I know I'm bullish because I'm looking at where are my previous higher low structures. My previous higher low structures are here. These are like my support zones, my key support levels right here. This is a key low. And then I'm looking at my highs. Where was the high at from last week? Somewhere up in here, right? So this is my range of what I'm looking for. So two things. I'm already bullish because I'm already off of this higher low. But also I understand that we could potentially be setting this up for a downtrend. So with me being bullish and with me understanding that we could potentially look for a downtrend, it plays into my analysis because I know I want to take buys on the charts back to these key lower high levels and key resistance levels. Now this part of the video, when I'm talking about these higher highs and higher lows, I did release a 44-minute video on YouTube going over, like, breaking down higher highs, lower highs, and higher highs or higher lows. So I'm not gonna really do it too much in this training, and it's gonna be like kind of like a more advanced, but still like beginner friendly training for y'all too. So just keep that in mind. If you do want to understand what I'm talking about, that terminology, just go back and watch that video in particular. So I understand that we're in a downtrend, but I also understand that the market needs to give me a retest back to the top of the zone, either here or here. So what I'm going to do is I'm going to use my fibs to give me an idea of how far I want to take this trade back to. So this is the current high, and at the time, this is my main low. So for me, if I'm looking to take buys on US 30, I'm waiting to see a retest either back to this higher low structure right here, or I'm looking to take my trade back to the 78. Now, the same way I give y'all times on when you want to trade NAS 100, I'm going to give y'all that. Excuse me. I'm going to give y'all that same time of what I'm looking for over here on US 30. Now, US 30, I have a small window of when I trade. US 30 is literally, there's an opportunity to, I'm going to talk about that actually. I'm not even going to get into it, but the main move that happens on US 30, I take my main entry every morning at 6:30 a.m. Between 6:30 a.m. and 7 a.m. That is my first main entry that I'm looking for. Before I was trading like this, and it's so crazy now that when I look back and think about it, before I was waking up early and trading like between 6 a.m. and 7 a.m., my main entry will always be like right around opening bill or right around after opening bill. And between 9:45 and 10 a.m., we're looking for our entry, or we're seeing that US 30 is giving me an entry on the charts. These are my main two. I'm letting y'all know now. These two entries in particular are my main two bread and butter entries that have me done for the day by 10 a.m. Like I literally be off the charts by 10, and I'm done for the day. I can be chilling. I don't gotta force another trade. I don't gotta look for another setup. If it's there, I can take it. But if I'm not on the charts, I'm not tripping. Right? So 6:30 a.m. to 7 a.m., my main bread and butter. Opening bell 10 a.m. is my second main bread and butter. There is another opportunity that I can talk about. I'm gonna talk about it a little bit. But I want to make sure that the market is really back to those conditions first before I really go in deep with it. But there's usually a reversal that happens on the charts between around, I want to say 1:30. My fault. Ironically, that was still 1:30. I just put in military time. Between 1:30 to 2 p.m. Eastern Standard Time. I guess I should specify that just in case you guys are wherever you are in the world. I'm going based off of Eastern Standard Time, so this time frame might be different for you. I should have said that earlier as well. I'm sorry, in the last video that I recorded. But all right, so this is my main time frames that I'm looking to trade. The same thing, it looks familiar, right? This is still the same area of when I'm looking to trade NAS 100. It's just I'm on a higher time, focusing up, right? So I'm on my 1 hour on here. Excuse me, for US 30. I really try to look for. And I'm going to put my vertical lines right at that 6 a.m. price, just so I can show y'all. But on US 30, I really try to look for entries between the 15-minute and the 5-minute, if we're talking about my main bread and butter. You can take entries on that 1-minute time frame too, but I found that it's way more cleaner for real if I'm looking at my 5 and 15. But I'm going to give y'all a game on trading the 1 minute too, so. Now, person mentees is watching this. Don't worry, I'm gonna get them the sauce. Like I'm gonna get them right. I know y'all like, bro, what you talking about? You still be trading on the 1 minute, and that is very true. So let's run through this real quick. Let me run play, and let's get into it. So I'm gonna let this market play out. As you can see, this is how the market opened on Sunday, as expected. Gave us a retest to this lower high structure. So all of this, I'm not surprised by, right? So this is Opening bell, I'm not opening bell. This is London session. So London session, the market took off for buys here. Right? So I'm going to replay this. Rewind this a little bit for y'all so we can see. It's the same concept I talked about on NQ, right? That 6 a.m. push, 6 a.m., 7 a.m. push. So two things, right? Monday analysis, I always expect the market to go for higher highs and higher lows, or lower lows and lower highs. So in this scenario, even though I do have my fills right here, I probably would have been bullish just because I know I personally would be looking for a retest up into this area. So if I drop down to my 5 minute, if I drop down to my 1 minute, right, let's talk about it. But I'm going to still show y'all the other opportunity on this too. So if I drop down to my 1 minute, you can see here, 6 a.m. happened. If I'm bullish, I'm looking to take this next cross. So remember what I said earlier about the crosses. I always personally take the first cross because there are times where the first cross would be the entry that you need and then it would just go smooth selling. But I also understand there are other times on the charts where the market will break, it will retest, and then it will continue for the trend. And that's why I always tell y'all can have the option of taking the first one or you can take the second one. I always take the first one just so I can make it a rule of habit of just getting used to take. I'm cool with a pullback, I'm cool with drawdown. I always take the first one no matter what. Unless I miss the first one, then I just wait for the second one. Right? But for the most part, I'm always in that first trade. And you can kind of see like right here, this is technically that first cross. And then by 6 a.m., that was the second official cross that I would have took. And that's the reason why this trade took off. So like I'm used to seeing when the first cross happens, if you're entering at the first cross like me, just to be ready for the market to pull back. So I'm not selling a trailing stop loss yet. I'm waiting to see for the next continuation. I'm not letting the buy cross right here. I'm not setting the trailing. I'm being confident in my move. I'm holding, letting it retest, and then it takes off. Because 9 times out of 10, usually my 1 minute cross, the first cross I take is just, the entry be so good that the entry turns into a support. So my first, as you can see here, let me draw the lines. If this is my first cross right here, I enter here, right? Boom, what happened? Retest support, continuation. Pull back, retest support, continuation. And honestly, I could really show y'all on a lower time frame too. The fibs work on every single time frame, right? So I use it on the 15, the 5 minute, the 1 hour. But if you're scalping on the 1 minute, like I talked about in the last video, or even just in this video, for my main entry, when I'm trying to see, okay, US30 is pulling back. Where is it pulling back to? Oh, it's coming all the way back here? Bet. I'm going to wait till it gets down here, and then I'm going to look for my buys. I'm either taking my buys right out to 78%, just price action, or I'm going to take the buys once I get my official cross. And what this does, by using the fibs with the MAs, this helps stop you from trying to, like, basically, it stops you from getting psyched into selling early. So if I know my fibs is, if I know the market is approaching to the 78, I'm not looking for sales right here. On a higher time frame, can you imagine the people that, let me see if I can delete everything real quick. Can you imagine, you see this bearish candlestick, ooh, bearish engulfing, the next candlestick goes bearish. Most people will take sales right here, and then they will look to take this sell trade down to the previous low, not realizing that if they use the fibs like us, then they will know, okay, cool, this is a retest of my 78. I'm buying here. I'm not selling right here. And then what happened? Bullish engulfing candlestick, continuation to the upside. Now, for US30, I would say US30, this is a pair that you can be comfortable trading with a 5 contract, because this pair in particular isn't as volatile as NQ. But remember what I did say about those, about the I forgot the actual term of what it's called. But basically, when you get the Express account, after you pass the combine, the market, like the Express account, you can only trade 2 contracts. That's the only reason why I kind of want y'all to only just trade 2 contracts, so that way y'all mentally will already be in check. But if you focus on just prioritizing passing the challenges, then you can go full margin, 5 contract, you buy, and then understand your stop loss will just have to be a $500 stop loss, right? Maybe I shouldn't talk about that right now. I should probably say that for later on in the next couple of chapters, but it's cool. So I run a play on here, right? 5 contract, your goal is going to be, what do we talk about? $1,500. Or if we're not going based off of the $1,500, I want y'all to focus on our fib action. And that is going to be, let me run play on this a little bit. Well, TP already smacked. That's the right problems to have. But our fib action will be here, right? And then as you can see, like I said, Mondays for me are my big days on the charts. Those are the days where the market gives us our higher highs and higher lows, right? So if it's a higher high day, then we know those are days that we can get nice 200 pip moves, 300 pip moves between US 30 and NQ, right? That's the beauty thing about it too, is like I can trade both of these trades. So now I'm talking from a personal account standpoint, but you can do this on the front end of the account too. Just manage your accounts, because you know, at most you can only trade 5 contracts, right? At most you can only trade 5 contracts on the minis. If you're trading micros, I believe it's 20 contracts. But if you're trading minis, you can only trade 5 contracts. If you're asking why is that a thing, like, oh, what's the difference between the micros and the mini? Remember what I told y'all, these minis are like the big brothers to those small pairs. So remember how I said earlier, the NQ is MNQ for the micro NQ. And then for US 30, or aka the Dow Jones, the mini version, the micro version of this is the MYM, right? So if I type in MYM, you can see right here, micro E mini. So I'm gonna show y'all, actually I can show y'all the volatility between these two too. So that trade right there would have made me 1400s, 1475, right? Obviously it took off for more, so that's great. Let me see if I can show y'all. Excuse me. I'm gonna show you that same volatility over here if I pop the 5 contract, so y'all can see the difference for US 30. For the Dow Jones, I'm sorry. I'm used to trading indices, so that's why I call it. So if I place the 5 contract over here, that same $1,400 trade is equivalent to 567. So that's the difference between the volatility. And you have to, like I said, you have to ask yourself, do you thrive in volatility, or would you rather be conservative like this? Me personally, I've been used to volatility for the longest. So when I first, I'm gonna tell you something. When I first took these challenges, I was trading with the MYM because I wasn't too hip to Top Step at first. I was probably watching this video. I didn't really understand the lot size rules or nothing like that, and I was trying to be modest. And it took me longer to pass the account because I was being modest, or like setups that I would usually make $10,000 on, $15,000 on. For those that don't know, obviously I have my own personal funding now. So big moves that I usually catch, I'm over here being modest over here on the challenges, and eventually I got into the habit of trying to chase certain setups or forcing certain moves because I was so used to making so much amount of money because of that. And that's why eventually on those early accounts I had, I was losing accounts early just because of that little small mistake. So I know me personally as a trader, I thrive off of volatility. Even if I'm on a scalper mode, $500 for me on US 30 or NQ, right? But we're gonna go back. I'm gonna focus on US 30 for right now. Like $500 for me on US 30 is literally one candlestick. So let's say a trade ends up deciding to pull back. Cool, I can make $500 real quick and decide to take profit if I want to. Like that. See how quick that took off? $6,000. Quick in the mud. So me setting a trailing right here, I'm cool with, if my stop loss hit 3,000, I'm still up 3,000 on the day. Versus if a trailing hit on the mini version, the micro version of that, I just settle for $300 on the day. So y'all see that big difference? So that's what I was getting at with that. Now, US 30, here's that second opportunity I was telling you about. So first of all, this is 9 a.m. This is opening bell. This is 10 a.m. Price action, the US 30 loves price action. So this sell-off that's happening right here, we are not surprised about because it just came off of a previous resistance structure. I promise y'all, if I drop down to this 1 minute, I bet you there's a 1 minute cross that happened right here on the charts. Let's go see. Sniper entry. Remember how I told you I always take the first one, right? So first cross happened right here. Boom. Second cross happens right here. I'm entering the trade, and I'll just continue to ride down until the market shows me that it's ready to reverse for the continuation of the uptrend. And we're not tripping because remember, we already knew starting the day that we were going to go for a retest back to our fibs, and then we should be looking for sales, right? So that was already kind of like our biased approach attacking the markets on Monday, right? From Sunday night going into Monday. Now, a couple things I want to talk about too is when do I switch between my 5 minute and my 15 and my 1 minute, right? So how do I know when I want to take my crosses? How do I know when I don't want to take my crosses, when it's not valid? Because obviously all of this choppiness in the market, there's opportunities where the market probably cross and then it recross to the downtrend, right? How do you not get psyched out, or how do you know when is it time for it to reverse? When is it time for it to not reverse? This is when the fibs come in hand, right? So for those that don't know, the month what was it, April? Beautiful, amazing price action. There was a lot of respecting going on to the fibs on both sides, right? So what I mean by that is, market took off a bias here, right? I can happily place my fib structure from here to here. Honestly, where was it at 6 a.m.? 6 a.m. was a little bit further. So technically the main one will be right here, personally for me. But I also do keep in mind wherever that opening bell pushes at, that's where I drop my fibs to. What typically happens is if the market starts to sell off, how I usually in normal market conditions, what will happen is the market will give you a nice buy. If I miss this buy entry down here, I'm not taking none of this up here. I do not care. I'm waiting for the full retest back to my 61 or my 78. And the amount of times, I'm gonna have y'all, this your homework, go back and back test and see. Like, go back and back test and see the amount of times the market broke out and gave us a full retest back to the fibs before the next continuation. Perfect. So like imagine, we're catching a trade, right? I caught the initial buy entry down here, boom. This is 270 points, aka 2,700 pips. Then I catch the same sell move back to the downside. That's another 2,700 pips, aka if we're trading our US 30 position or our Dow Jones, this is 2,500 going up, this is 2,500 going down, this is $5,000 in one day. Now, I'm showing you all the opportunity just so y'all can see how good the volatility on this pair is. So I don't want y'all to ever feel like, oh dang, Abe, like I'm not gonna, if I miss this move, I'm not gonna have an opportunity to catch the next one. I'm not tripping. Same thing. If I have a losing day, I can be down $1,000 on a day. Cool. Lock myself out. Lock the account. Why? Because I know the next rest of the week, I'm gonna go crazy on the charts and I'm gonna make that money back plus more if I need to. For the challenge sake, though, as you can see, it's so simple to make 1,500 a day off of this. There should be no reason why you guys aren't killing the charts, right? Like, no reason at all. Even if you're using a 5 minute. So, like, I can show you this here. So, let me take profit on that. 5 minute cross happens. You take sales. Where am I putting my stop loss? Like I always tell y'all, right above that previous lower high stretcher. As you can see here, if you're trading, I guess the 150 count, that'll be the only reason why your stop loss will be this steep. But as you can see here, this is what my real stop loss will look like. My mental stop loss, if I set one or if I don't set one, I know if US 30 comes back above here and closes above here, I have to close this trade. If you cannot comfortably be in drawdown like this, hence, aka, if you have a 50K account, your stop loss should not be no 2,200. You're full reporting one trade for what? It's not even worth it when you don't need to do all that. When you can, like, even though you could be done with the trade within, what, 1 or 2 candlesticks right here. I'm going to show y'all. Give you a retest. Go ahead, push. So, even though this setup was perfect, even though my strategy it does wonders, I would rather you be smarter. I would rather you be more disciplined. I would rather you, no matter what, I'm taking the right position every single time, and I'm being patient. I'm letting the market do what it do. So instead of placing a 5 contract, if it's a setup where I gotta risk $2,000, instead of going 5, go ahead, bring it down to 2, because it don't matter anyway. We know we need a full need. We know we should be expecting a full retest back to this 61 stretcher or the 78. So I can take the same sell setup, and this is my main strategy anyway, coming here or here, right? So I only need 1,500 for the day, right? And then we just let the trade rock. Now, the only downside to this is, and this is what I don't like about the prop firm sometimes, with Top Step in particular, for Eastern Standard folks, well, I guess for anybody, they close at 3:10 Central Standard Time. So for Eastern Standard Time, for me, that means I have to close the trade by 4 o'clock. It's a blessing and a curse. It means I can't be a swing trader how much as I want to be, but also it helps me secure profit for on the day and just being done for the day, just getting in the groove of making my money and being done for the day, right? So I guess it's a love-hate relationship, I like to say. But as you can see here, 2 contract, being disciplined, still gets the job done. Like I said, This is the original question I asked myself. What made me go on this whole tangent was, how do I know when it's actually time to trust my crosses again on the 1 minute? I trust my crosses on the 1 minute again after it hits my 78. After it hits my 78, then I trust my crosses on the 1 minute. See how the market just pushed up like this? It hit the 78, it started consolidating, and then what happened? It started taking off for nice buys. This is still a beautiful scalper opportunity. The only reason why I wouldn't have taken this trade is because later on in the day. This is 3 o'clock. This is out of my trading window of when I like to trade. I'm already done for the day. I'm minding my business, right? So I'm gonna give y'all. Let's go ahead and slide over. Let's go over to another day, and we're gonna rinse and repeat. I want to show y'all. I just want y'all to see the consistency. I kind of want to show y'all one during opening bill, so y'all can kind of like see what I be looking for. Stop. Here we go again though. In this scenario, what am I looking for? Let me rewind it. I'm coming to my higher time frame. I'm like, okay, I'm waking up. I see that we're starting to get lower highs formed. We're starting to get downtrends formed. I'm still bullish, right? I'm still expecting some form of a bullish manipulation, but I understand that, okay, opening bell, we should look for a retest here. If market fails to break above here, we will be looking for sales, right? Simple as that. If market fails to break above the structure, I am looking for sales off the top of this zone. Boom. Look for buy pushes up all the way up here. Fails to break structure, take same sales setup back down to the downside. If not, for a continuation down here. So as I come here, I'm waking up in the morning. I see it's 6 a.m. when I wake up. Let me go ahead and press play one more time. 6 a.m. when I wake up, I got a nice bullish candlestick. I see from London session, they gave us a 3 a.m. push. Try to take off for the buys. It pulled back. And now I'm just looking for the continuation. If I was to draw my fibs, what do we see? I draw down to this 1 minute. Let me show y'all. I'm telling y'all, bro, the strategy cooking. This is the wick off the 78 showing that it respected it. Kept playing. Gave me a double bottom. 6 a.m. is my prime time when I like to look to take my buys. Excuse me. But let's say I woke up a little bit late. So I'm going to let this play out. I'm going to let this play out a little bit. And I'm going to go to the 5 minute because that's my main time frame I like to focus on. If I get like a strong bullish momentum candlestick, I'll take it. But if not, I'll wait. And this is why I say I come to the 5. Because yes, that cross was good. But even though it's good, there is room for a pullback. There's always a pullback. I'm always going to anticipate that a pullback could happen on the charts. Especially on a day like this where, like I said, Tokyo, London took off for the sales. It failed, took a retest. It created a lower high right here. I'm just going to be patient and wait. Show me like an extension push. Show me like a, I always call this extension, but I know some people call it something else, like liquidity sweep, whatever y'all like to call it. For me, I always call it like, I want to see like a nice volume push to the downside to really confirm that you're really about to go for the buys. And this is, I mean, yeah, this is the buy that I usually take. Once I see a clear manipulation sell-off, cool. And then you come back bullish. Now I take these buys, and then I look to take you back up into this stretcher. Mental stop loss will be all the way under this zone right here, right? And I say mental stop loss because I don't want y'all to do this, but me personally, I don't. I'm at the point in my career now, I don't set stop losses because I'm on the charts, and my mental is strong enough to, if it push here, I will close this trade if I need to. But I don't set them because sometimes there is the downside, kind of like something like this. Let's say I bought right here, and then my stop loss is like down here. Manipulation push, and then here comes the actual move that you wanted to see. So I'm gonna play on this. I'm gonna let y'all see. And this is me doing this on a 2 contract, just showing y'all how to make 1,500 for y'all challenge. I gotta make sure I'm remembering that to keep saying that versus me showing y'all the 5 contracts and stuff. But here, what are we seeing on the charts? We got a break. It gave us a retest. It's still breaking and retest. As long as you don't break below here, I'm still holding. What time is it? This is around 9:15. See that fake out, and there go the continuation. So it broke, retested, broke again, fake pumped inside the zone again. Even though I did say I wanted to wait and see like what it looks like when it closes. But I still held the trade only because there's like a manipulation where sometimes it will fake hit people trailings, wick people out, just for it to pump again, right? I've been here. I done seen it all with these charts, man. Like, and if I was to go ahead and draw these fibs over here too, let me show y'all. The other reason why I would have held this trade, well, why I did held that trade, is because here is the push, back to the 61, failed to break below, continuation. Honestly, I probably, even if it did come all the way down here, I probably still would have held it, and my mental stop loss still would have been under this zone, because all it's doing for me is just retesting my field levels before the next push, right? So now we're at opening bell. This is like my prime time of when I'm trading. I don't, by this point in the day though, we already hit our 1500 on the day. So we're done. We're not trading no more. You should already be done for the day. And literally, I already just showed you on 2 days how you can pass the challenge. But looking at this, I'm just about to keep going. But before I was trading 6 a.m. time frame, 7 a.m. time frame, I was trading opening bell time frame. I was trading waiting till 10 a.m. for the market to show me my real move. So without me even knowing my new strategies and how I used to trade, how I trade now, my other analysis, I could flip this actually. Downtrend here, boom, look where we at, right on the 61. One thing about US 30, it loves fake breaking out and then coming back down to the downside. So that's all I would anticipate. Boom, beautiful breakout. Now watch the sales. Watch the sales. Come back inside the zone, we look for the sell. That's all we wait for. This is like literally my bread and butter, like what I used to call it my center chat. I used to fake break out of the zone, cool. The moment it sells back inside the zone, my strategy used to be this. Sell the break and close once the market comes back inside the zone, and we take the sales based off the 15-minute time frame. Once it closed, stop loss is above here, and then take profit is really all the way back down here, to be honest. Either here or here. That's literally my strategy. That's like my other strategy that I would have waited on. Now, it's so crazy, though. So, well, before I can finish talking, TP1, TP2 smash. That's literally my bread and butter of my zone breakout method. The fake reversals, fake breakout into the continuation. But this right here is crazy because, like, this can mentally psych somebody out. When I'm looking at this on a 15-minute, like, this just looks so choppy. And that's why it's important to wait for it to close back inside the zone. Because once it's really, I probably would have took it off this kind of stick right here if I'm going based off the 15-minute. But if we're on our 5-minute, right? If we're on our 5-minute, and let me go even further. If we're on our 5 and our 1, we call that entry off of the first cross, right? So let's say I took it here. It's a perfect example. I take my first entry here. I always take the first cross, right? Boom, this is the first one. Profit. It comes back to retest that cross area. I'm in a little bit of drawdown. I'm not tripping. It recrosses again. Either I'm doubling down on it with another entry, or this is actually the entry that I'm taking after it shows me that same extension before the reversal. So that same kind of concept I showed y'all over here where we caught the sales, like the market dropped and then it gave us a smooth buy. That's really basically what this is too. It gave us a final push and then it got ready to give us our sales moves. Right? And then once it gave us this recross right here, and then now it started making this pattern of respecting our fibs, creating lower highs. So this is the new high. The market pushes, creates a new lower low, pulls back, creates a new lower high. Boom, double top, and then the rest was history. So we're not surprised when we see these sell-offs on a 1 minute because like these entries right here, I'm still so grateful. Like that I used to be scared of trading on a 1 minute, and I didn't even realize the opportunity that was really here to milk it on the markets with the fibs. Right, so this is still my main strategy. This isn't even on some scalping stuff. This is me. I'm entering my main crosses, my main entry on a 1 minute, and then once I'm ready on a 1 minute, I'm going to my 5 minute, my higher time frames, my 5 and 15 to really show me my bigger play. And my bigger play is, remember what I said at the beginning of this video. My bigger play is to focus on my fib levels. So I'm going from the low to the high, and I'm setting my TP at the 61 or at the 78. Obviously, if it's momentum, if it's news, whatever, that does play a factor in it. But as you can see here, like these trades at the top of the zone up here, and I'm sorry, I guess I should have played it out for y'all, my fault. And I'm gonna actually really play it out because I want y'all to see what it feels like to be in drawdown and stuff too. Let's say you go 2 contract. So let's say you see this trade right here. For whatever reason, let's say you being greedy. You pop a sell. The goal is to take it here. It's 1350. The goal is to take it to 1,500 pips. I mean $1,500, because that's what you need for half the day, right? Boom. I'm gonna let this play out so you can see what it looks like to be in profit and what it looks like to be in drawdown with a 2 contract. So cool, we are 350, we are 370. Great, we are 410. The market pulls back. And yes, if you're asking like, oh, like, hey, like if I'm up this much, can I just set a trailing or take profit and into the recross? That's combining the 2 different strategies. Yes, you could. You could use the scalper strategy, or you could just focus on the main strategy. The only reason why I wouldn't recommend it is because like you gotta find a balance between overly using the scalper with the main strategy, because then you could potentially get psyched out some days. So as you can see here, you would have been in drawdown 500. I'm embracing the pullback. I'm not stressing because I understand all that this is a fake manipulation before the actual continuation, right? And no, I did not just try to rhyme right there. So I'm comfortable. I'm holding this trade, right? Now I'm up 670. Now I'm up 600. Now I ain't gonna lie. If you here, like if you up 600 here and you want to take profit, I can't even be mad at that, because this is a clearer, strong push to the downside for the sales, and this would be a buy move that I would take back up into this area. Not gonna lie, just cause like how clean it look. And then honestly, that's right around our fib structures too. So this will let us know too, like okay, cool, like you give me a retest to the 61 and the 78, then I know once again I can look for the sales. It's actually, I can talk about this all day, man. Like I'm realizing as I'm recording this video already 30 minutes. I'm not gonna make it too long, but like this is like, imagine though, like, cause like you wouldn't even have to hail this trade, and you could have just scout this. There's nothing wrong with holding this one position though. This, cause I'm only doing this cause like obviously, this is my main bread and butter. So obviously I know what I'm doing. But I'm gonna show y'all both ways. So okay, cool. TP just smacked for 1,500 pips, but let me rewind it real quick. Cause just in case you knew, or you're like, you know what, Abe, I can't be comfortable. I'm not comfortable yet holding a trade like that. Cool. Set your trailer. MA's cross again, you take buys. We already got our new field levels, right? So you're gonna TP at the top here. So that means what I just make. That trailing hit for $300. Your new TP is gonna be at the top right here for 640, because you're just respecting your fibs. You're not even trying to do too much. You're just trying to respect the fibs. It's pulling back. It's trying to show you that it's going for the sales. You're like, oh my gosh, you're good. You move your chart in profit. Market push up. If you get wicked out, okay, I got wicked out. Now I'm waiting for the sales to show me the move again. Let it give you an extension, and then we take the trade off of the cross. Excuse me. What time is it? It's still early too. It's 12 o'clock. I forgot what time did I tell you guys for the reversals. I'm pretty sure I told y'all 2 o'clock. That's my time. 1:30, between 1:30 and 2 p.m. is when I usually start looking for my next reversals. So right now this is still kind of early. So I'll kind of be mad if I had missed that sale. I ain't gonna lie. It's usually like when I'm at the gym. But honestly, it's kind of perfect still. So technically, as you can see here, you could have took that double top entry, but that's why it's okay. If you missed that entry, the moment it closed back inside the zone, you got your sale. Close out, take sales, nice manipulation, and then obviously the TP would have been there. And then boom, same thing. It's just that was just a little bit more complicated. You see, like why I was just rather you hold it. Like you would have to really be on the charts paying attention. Holding this trade, hit TP, because it didn't even get to the 78. It got to the 61, and then it continued for the downtrend. And I guess that's another bar I can give you too. The 78 is the furthest that the market should be going to. But what I would say, like, is my guaranteed hitter that I know gives me 95% to 100% accuracy is that 61. Yeah, you might not catch the full move, but this is those slow jabs that you constantly hitting. You jabbing, you jabbing, you jabbing, you wearing on the markets. Boom, 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 boom. Now you got a big move that's about to like knock out that payout for you when it's time to get a payout. Or that's gonna be the big move that helps you pass your combine and that sets you up. So that is officially my bread and butter strategy, man. Fibonacci with the MA cross. Quick repeat. I always come to my 1 hour time frame. I mark up where are my highs, where are my lows for the week or for the day. If I'm going for the day, I'm always looking to see where was London highs at, where was London lows at. Once I have that range or where it's at, cool. I'm marking up my fibs based off of that, depending on where I am in the market. Both setups will be there for you to take. It just depends on how you feeling for the day and which one you want to take. I'm personally, I love buying. Buys be way more. I can say buys be way more smooth, but buys be way more obvious than the sales. Sales are more so. The sales on US 30 is more so like a price action type of thing. Like it'll hit the price and then it'll immediately start selling. So for US 30 when it sells, I love selling over there too because it's like okay, cool. I can trust my 78 to get hit and immediately drop, and I'll be in zero drawdown because I'm expecting my 78. So this is my strategy. This is my main strategy. I hope you guys enjoy it. And yeah, man, it's about to be it's about to be fire. These are my main two strategies for real. It's like y'all finally get to choose y'all pick and poison of which strategy that you like the most. I told y'all I was gonna get straight to the point. I wasn't gonna do no fluff. And I think now what's next up? Module 2, we talked about the 10K strategy. And the reason why I called it the 10K strategy is because for Top Step, the most currently as of right now, you can withdraw every single payout is $5,000. So in order for you to draw with $5,000, you can only withdraw half of your account balance, which means you will have to make $10,000 in order to withdraw 5K. So if I make 100K, technically I would still be able to request $5,000 at most every payout. So it doesn't matter how much money I make in a day, because at the end of the week, I can still only withdraw $5,000 after my fifth winning payout. So that's the reason why I called it the 10K strategy. And that's kind of also the reason why when we talk about those different accounts, so I told you about the 50K account, the 100K account, and the 150K account. As of right now, for me, I'm like, there's no reason for us to buy the 100K or the 150K when I can only withdraw 5K at most anyway. What's the point? Until they up it to 10,000 or 20K, then I'll go ahead and withdraw the full amount. Or then we can talk about going for those bigger accounts because then it will be more worth it, more of an incentive to do it. These next two modules are going to be both focused on psychology, and then it's going to be focused on managing the funded accounts. So psychology, definitely make sure y'all watch them videos over there because I'm going to talk about over trading, fear of missing out, and then we're going to talk about just staying consistent with one strategy. And then for managing the funded accounts, that's a module 4. So really, y'all can watch it now, but I would honestly rather y'all watch it when you get your Express account. So after you pass your challenge, it's time to get the Express. That's when it's time to focus on module 4 and learn how to actually manage those accounts. All right, y'all. I'll catch y'all in the next video. Let's get it.